Hey folks, welcome you all to a new video. This is CA Ganesh Bharadwaj. So, in this video, I am going to give you guys a paper analysis of your costing Jan 26 attempt. So, which just got over today. So, guys, we are going to do an overall paper analysis, and of course, I'm also going to discuss the MCQ solutions. I will provide you guys with the MCQ solutions as well. Now, let's get started. So first of all, sir, many students had already messaged me, what's your view on this paper? Oh my God, what can I tell you guys? Now, out of the chapters which I had mentioned as the top priority chapters in our exemption strategy, that is in the one day before exam strategy, I gave you guys, I conservatively told you 75 marks will come from these chapters. Guess what? A whopping 99 marks came from these chapters alone. Right? Cost sheet was tested for 11 marks, overheads plus ABC 15 marks, more or less. This is what I predicted. Marginal costing for 13. And guys, remember, yesterday I made a video and I told you, this is what I told you: budget and employee cost put together on an average every attempt they are testing for 20 marks. I told you. Now just look at what has happened. Budget 11, employee cost 9. Exactly, they tested 20 marks from these two chapters. Our prediction was spot on again. And 99 marks out of a total of 118 marks, including the choice questions, 99 marks came from these predicted chapters. That is the all-time high scoring chapters. Guys, and the best part is that this time materials, this entire 12 marks were tested in the MCQ component alone. The first case scenario, plus there was one individual MCQ question of 2 marks, entirely came from material chapter. That was the importance they had given. But this one was exactly spot on. Your budget plus employee cost put together exactly was tested for 20 marks. Those who watched my yesterday's video, you guys would have seen that. So this exactly came in. Now, one more thing I wanted to tell you all. Guys, if you had solved our question bank, that is if you had watched my lectures, and during the course of the lectures I would have dictated library of adjustments, and if you had solved it properly, now literally you would have been in a position to definitely cover comfortably about 90 marks, right? Speed and other things might be different, but you will at least know for 90 to 95 marks for sure. In fact, I can tell you confidently, the entire 180 marks were covered in our classroom only. Right? In our regular and exam oriented batches, it was completely covered in our classroom only. Nothing came out of that. So literally everything came only from our question bank. That's about it, right? Of course, questions might not be lifted as such, but conceptually every single thing we have covered, nothing came out of what we have not covered. So in fact, we didn't leave anything at all. We did 100% coverage. So that's about it. We even did RTP, MTP, past exam questions and everything. So literally this came only fully out of the entire paper, came completely out of our classroom discussion questions only. Now, having said that, sir, in your view, how do you feel the entire paper was? Guys, the entire paper was, in terms of complexity, it was easy. It was easy, not at all difficult. But now, the main thing where I feel students could have committed a mistake was in terms of reading the question. How many catches they have kept? Suddenly per month data, per annum data, per quarter data. They had literally mixed all these figures, I mean all these wordings. Now they are testing more on your observation skills, right? I will just do the first numerical problem, that is the first case study. I will do it right now. You yourself will see. Now they had kept so many catches in terms of observation skills. If you remember, during the course of our lectures, right now, wherever you guys make a mistake, now deliberately, this is where predominantly you guys make a mistake in your per month. If it is given per month, you need to do into 12 to arrive at per annum. If it is given per quarter, you need to multiply it with 4 to arrive at the per annum figure. Now many of you guys missed this out. I told you, I keep telling you this, you can't lose an attempt because of your observation skills and all. Literally guys, they tested so much on the observation skills, but for that the paper as a whole was not complicated. They had kept a lot of catches in terms of the testing on the observation skills. Right now, I have also given a question wise breakup of here I have done question wise, I have done an analysis as to which chapter each and every question came from. The first case scenario and the next question, these two, the entire 12 marks of materials came in this 30 mark MCQ component, which means material is a never miss, right? That's why I kept it to the top priority chapters. The other question, one marginal costing question also came in a full-fledged 10 mark MCQs. And one more thing that I noticed, question number 1A in descriptive was a general question that uses the concept of equivalent units. Equivalent units concept we actually learn in two areas. One is in process costing, the other one we actually learn it in service costing also. They used that for some packing material question, it came in. And one more thing guys, service costing was tested as a full 14 mark. Now not as a single question, they broke it up into two, one 8 mark question and one 6 mark question. This is how they actually tested that service costing area as well, right? Now without any further delay, now let's get into the discussion of your MCQ, the case scenarios. So the first question, so this question was tested from this chapter materials, right? Now what is the question about? Now let me read this out and now you will understand how Institute is focusing more on your observation skills, the way you read it. Spice Guard Limited manufactures pepper spray that is used by women for their self-defense. As per the estimates, there will be an average, look at this, there will be an average quarterly total market demand of 3125 units of pepper spray. This company, Spice Guard Limited, is expected to have 8% market share of the total market demand of pepper spray. Right? Now, what have they given? 3125 units is the quarterly market demand, not the demand of this company. Out of this, only 8% is the quarterly demand of our company, pepper spray. I mean this Spice Guard Limited, which means what is the annual demand of this particular company? 3125 into 8%, this will give you the quarterly demand of this particular company into 4, because this is a quarterly data. This will be the annual demand of this particular product, right? This is the annual demand of the product. Now, the company produces pepper spray using two raw materials, OC and OE. Each unit of pepper spray requires 4 kgs of OC and 1.6 kgs of OE, right? This is what they have given. Ordering cost per order, they have given for each of the two raw materials. Now look at this, they have given these three things: storage rate, interest rate, obsolescence rate. Why have they given? We did a very similar sum in our classroom. Now if you add the three, 5% plus 13% plus 2%, you will get 20% per annum. This is nothing but your carrying cost. This 20% should be multiplied on the purchase cost of the raw material. Is that clear? Next, for OE, they are given differently. There is no obsolescence rate. Storage rate is 2.5 rupees per kg per month, and interest rate is 1.25 per quarter. This is how they have given. Then, in this case, what will you do? Simple. Interest rate, that is basically your the carrying cost, right? Here it is going to be 1.25% into 4 into 200 rupees. This is the cost per kg, guys, correct? Now this is the carrying cost pertaining to interest, plus it is 2.5 rupees per kg per month, so 2.5 into 12. The sum total of this two will give you the total carrying cost per kg per annum, right, for this product OE. This is how it is. I have done the calculations. So the carrying cost per kg of OC comes out to 400 rupees. The calculation for 400 rupees is 20% on 2000. That's all. Whereas for OE, the calculation is 2.5% per kg per month. So this needs to be multiplied with 12 plus 1.25% per quarter. So 1.25 into 4 into 200. 200 is the purchase cost per kg of product OE, right? So now if you do this overall, you will get 40 rupees as the carrying cost per kg per annum of OE raw material. This is how you need to do it, right? Now, what have they asked? On the basis of the above case scenarios, you are required to answer the following. They had asked, now I have already done the back end calculation, guys. So what happens is, first what have they asked? What is the total annual cost of raw material OC and the EOQ of the first raw material OC? The answer comes out to, sorry, what have they asked? The total annual cost of raw material OC at the EOQ level. First we need to compute EOQ. So EOQ for OC came to 250 units, 250 kgs. Now I will maybe write down the answer, the final calculations I will write down. So there are two different types of raw materials, right? OC and OE. So as per my calculations, I've done it on Excel, OC and OE. So A, O and C, these three figures I will write down. So A is going to be 4,000, that is the annual consumption. So ordering cost per order is given in the question, so it's 3125, and carrying cost I have calculated, it's going to be 400 per kg per annum. Similarly for OE, it's going to be 1600 kgs. O comes out to ordering cost, it's coming out to 500 rupees per order, and carrying cost is coming out to 40 rupees per kg per annum. Now based on this, if you compute the EOQ, now for OC and OE, first we will do the EOQ. So the EOQ computation comes out to, I think they had asked, EOQ for OE they had asked. So the EOQ for OE came to 200 kgs. So this is the answer. EOQ for OC came to 250. So if you want, I will also write that EOQ for OC came to 250 kgs, and for OE it came to 200 kgs, right? So I have just checked the calculations also, since I did it on Excel. So reasonably I can tell you this, the calculations are correct. Now based on this, what you need to do, first your total annual raw material cost means what? Purchase cost plus carrying cost plus your this one ordering cost, right? Now in this case, your purchase cost comes to, for OC only they had asked, no? Yes. So the purchase cost comes to a total of 80 lakhs, and ordering cost comes to 50,000, carrying cost comes to 50,000, overall it comes to 81 lakhs. So answer is option number C. Now based on this, you can work out. So this is what I have got, right? Next one, what is the total annual cost of product OC if the company proposes to keep the order size to 200 kgs of OC per order? Now if they are changing the order quantity to 200, now they are talking about OC at the EOQ level, that is 250 kgs, the total cost comes out to 81 lakhs, right? Now in this case, if they keep the order quantity as 200 kgs, so once again we need to compute the purchase cost plus ordering cost plus carrying cost, and overall the answer came out to 81 lakh 2,500. So the answer is option number D. But guys, the first thing you need to do is to calculate the overall for pepper spray. What is the overall demand? So the annual demand for pepper spray is going to be 3125 units, that is the market demand, into 8% gives you the demand for this company per quarter into 4. If you do this, you get so 3125 into 0.08 into 4 gives you 1000. So this gives you 1000 units. 1000 units is going to be the the annual requirement of this particular product, I mean this particular output. Now they have also given here, so every unit of this pepper spray requires 4 kgs of OC. So the annual requirement of OC is going to be how much? 1000 into 4 comes out to 4000. This is how we got it. And every unit of output requires 1.6 kgs of OE. So 1000 into 1.6 comes out to 1600 kgs of OE. This is how I arrived at A. O is given. C, I told you the manner of computation. Based on this, we have done all the calculations. So the annual demand for raw material OC and OE comes out to, just now I told you, 4000 and 1600 respectively. So the answer is option number A. The next one, what is the EOQ for raw material OE? We calculate for OE it was 200 kgs. The answer is 200. What is the EOQ in kgs for OC required by the company, and the number of orders to be placed in a year? Simple, EOQ is 250. Number of orders is going to be A divided by EOQ. So 4000 divided by 250, it comes out to 16. Answer is 250 is the EOQ and 16 is the number of orders. That's about it, guys. 10 full marks. Now in my opinion, this is not even a complicated case scenario. This was more or less a direct case scenario, but then a lot of catches were there. Look, this was a quarterly, the total market demand. So now I'm not sure how many of you took this 3125 as the demand of this company itself. No, this is the market demand. Out of this, only 8% is the quarterly demand of this company. Since this is quarterly, multiply that into 4. This will give you the annual demand of the output for the company, right? Based on this output, now into 4, if you do, you get annual requirement of OC. Into 1.6, you will get annual requirement of OE. This is the catch which they have kept in this particular question. And here also, per month, per quarter, per annum, literally they have played around with the periods. That's about it. If at all someone is making a mistake here, it might not be because of a complicated calculation. It could be only because of this observation. That's about it. So they are testing more on observation. This is the reason, guys, while doing the questions in the classroom, I keep repeating you all to mark all these things in a red ink. The moment you read it, if at all you find something to be a little bit confusing, or if you feel if you're prone to commit a mistake in a particular area, just mark it then and there, so that when you're solving the question, even if you want to, you will not commit this mistake. Clear with this, guys? So that's about the first part of the question. 10 full marks, guys. As simple as that. So this is about the first part of the question. Next, so question 1 to 5 is covered in case scenario number 1. Case scenario number 2, what are they asked? Now in case scenario number 2, so once again this comes from this chapter, materials. Now what have they said? In a factory during the month of October, the following transactions have occurred in respect of purchase and issue of raw material A. Fine. So opening stock is there. So on 110, purchases, so on 510 and 810, issues on 1510, they issued about 1500 units. What is the value of, look at this, raw material A consumed? Okay, so the student, whoever gave this answer sheet to me, the question paper to me, so he has circled this carefully. Yes, very good. Now look at this. They are not asking you for the closing value, closing stock. They are asking you for the value of material A consumed using what method? LIFO method. Now what is the issue? So the issue is going to be 1500. No, last in, first out. First value, the 600 units at the rate of 56. Last lot. How much is the balance? 900. Take it from the last but one. So the other lot. So 55. So 600 into 56 is going to give you 33,600. 900 into 55 is going to give you 49,500. And if you add up the two, you get 83,100. So the answer is option B. That's about it. 2 marks. Right? Guys, this is very simple to score. Very, very simple and straightforward. That's about it. The next one. So question number 7. A good question. Now, many of you must be wondering from which chapter they tested this. In my opinion, this is a concept from flexible budget. How, sir? I will tell you. Some of you guys might be thinking, since they have given this is machine and spare parts and all, you guys must be thinking this is overheads chapter. No. Look at this. The following information has been given regarding 2 machines of a manufacturing department X Limited for the month of September. Now, they have given the spare part cost of machine A was 40,000. Machine B's spare part cost was 60,000. The total comes out to 1 lakh rupees. Now the further estimates for the month of October is given. There is an increase of 15% in the prices of spare parts in both the machines. Now understand, they have given the word what? Further estimates means what? Whatever is given below has not been accounted for above, which means based on this, over and above this, you need to give effect for these 2 line items. First, there has been a 50% increase in the spare parts of both the machines. Okay. Number 2, there is an increase of 25% in the consumption of spare parts for machine B only. Now, in this case, what will be machine A's cost of spare parts? What will be machine B's share of spare parts? Very simple. Machine A, what have they said? Now, both the machines, the prices have increased by 40%. So, machine A's value is going to be 40,000 into 115%. Guys, correct? So, 40,000 into 1.15 gives you 46,000. This is going to be for machine A. How about machine B? They have currently 60,000. However, there is a 25% increase in the consumption. For the purpose of consumption, that will proportionately, the cost will increase by 25%. Over and above this, there is also a price increase to the extent of 115%. The answer is 60,000 into 1.125 into 1.15. This comes out to 77,625, right? So 46,000 plus 77,625 comes out to 123,625. 1 second, I think there is an issue here. I have there's a calculation mistake I have made. 1 second. No, so 60,000 into 1.25 into 1.15. Sorry, this is a mistake, calculation mistake. This is 86,250. Thank God I noticed it. That's why I did it on Excel. So 46,000 plus 86,250 comes out to 1,32,250. So the answer is option number D, 132,250. So for material, for machine A, you should only give the 15% price increase. For machine B, you should give 25% increase in consumption along with a 15% increase in price. This is how you arrive at it. Let's move on to the next one. Now, this is question number 8. A company's wage budget for the last month was based on a standard production time of 30 minutes per unit, which means to produce 1 unit, the time allowed is how much? 0.5 hours. Perfect. Now, the standard wage rate is how much? The standard rate is going to be 50 rupees per hour. This is also given. Next, guys, during the last month, the company actually produced 30,000 units. The labor rate variance was 7,500 rupees adverse, and the efficiency variance was nil. Now, guys, efficiency variance is nil. They are asking you to calculate the actual rate of wages. Very simple. Now, efficiency variance, what is the formula? So, standard hours minus actual hours into standard rate. Am I right? This is efficiency variance. Now this is equal to 0. Means what? Ideally speaking, so standard rate will have a value, right? So standard rate is 50. They have given. So this is into 50. Basically, why is this 0? Because standard hours minus actual hours is equal to 0. Or in other words, there is no efficiency variance. Means what? They have actually taken the time which they were supposed to take, or in other words, standard hours is equal to actual hours. Correct? Now, we know the standard hours. How? Now, they actually produced 30,000 units. Every unit, they were allowed to take 0.5 hours, which means how much is standard hours? 15,000. Now, 15,000 is also equal to actual hours. Hence, standard hours is equal to actual hours is equal to 15,000 hours. Clear with this? Perfect. Next, what should you do? Now they have given labor rate variance is 7,500 adverse. How do you calculate labor rate variance? Standard rate minus actual rate into actual hours. Correct. Now, what is standard rate? I know it is 50. 50 minus actual rate, right? We need to find out the whole into actual hours. How much is it? 15,000 is equal to minus 7,500. So this 15,000 goes to the other side. Minus 7,500 by 15,000 gives you minus 0.5. So 50 minus AR is equal to minus 0.5. This goes to the other side and this comes here. AR is equal to 50.50. The answer is 15.50. That's about it. Now, you need not mug up. This is why we conceptually learned our standard costing chapter. If you have the conceptual clarity, automatically you will be able to attempt this and take 2 marks in your pocket. As simple as that. Next one, question number 9. What are they given? A textile manufacturing company recovers the factory overheads on a fixed percentage basis on the direct wages and the admin overheads at 25% on the factory cost. The company has furnished the following data for job number 201. Direct material figure is given, direct wages figure is given, sales figure is given, profit is 25% on cost. What is the percentage recovery rate? Means what? They're asking you to calculate absorption rate for factory overheads for this job number 201. Very strictly speaking, this is being tested from cost sheet chapter, because they are testing you in the format of cost sheet with a percentage, that is nothing but absorption rate, right? Whatever it is. Now, very simple, guys. So what you need to do is you need to prepare this format of cost sheet. Basically, direct material plus direct labor plus production overheads will give you factory cost. To that, if you add AOH, you will arrive at your cost of sales. To that, if you add profit, you will arrive at your sales. Now, whatever figure is given, this is given, this is also given. AOH is 25% on factory cost. Okay. Sales figure is also given. Am I right? Yes, this figure is also given. So now with this sales, you can reverse work. Profit percentage is given. So you will arrive at your profit and cost of sales. Correct? Now they have given AOH is 25% on factory cost. So if factory cost is 100, this is 25, this is going to be 125. So you can reverse work, arrive at the factory cost. Right? So the cost of sales divided by 125 into 100, you get factory cost. Now factory cost total you have, right? So you have direct material, direct labor. The balancing figure is going to be production overheads. So you arrive at production overheads. I will tell you the calculation. Production overheads came to 20,250. This is production overheads. Now 20,250 divided by 45,000 into 100 gives you 45% as the absorption rate. Here I'm giving you guys the manner and the approach of solving this question, and I'm giving you the final answer because I have solved it using my Excel file, and with that I checked, and finally only I'm giving you guys the answer. So the correct answer is 45% here. Right, guys? So this is the reverse working sum they had asked for. Next, question number 10. This is from the chapter labor employee cost. A garment factory stitches each shirt through a single hand sewing machine operator. The sewing time required to stitch each shirt is going to be 15 minutes. The operator is paid at rupees 65 per hour, and the factory works for 40 hours per week, and the production target is going to be, now look at this, guys, 480 dozens. One dozen will have 12 shirts. 480 dozens will have 480 into 12. The target is going to be 5,760 shirts. This is the target for the week. In this week, they are supposed to stitch 5,760 shirts. And every shirt you are allowed to take how much? 15 minutes. So 15 minutes is going to be 0.25 hours. Correct? 15 by 60 gives you 1/4. 0.25 hours is the time allowed per unit. Right? So it's going to be 0.25 hours. Right? Now, what have they given? What have they given? Every worker will work for 40 hours every week. Perfect. What is the number of hours and the number of operators required to meet the shirt's target? Simple. Totally. First, how many hours is the time allowed? Simple. I need to produce a total of 5760. So 5760 units I need to produce. Every unit I am allowing 0.25 hours. Totally it's going to be 5760 into 0.25. It gives you a total of 1440 hours is what you need in this week. But every worker can work only for 40 hours. So 1440 divided by 40. So which means you need to hire a total of 36 workers or operators. So the answer is going to be 1440 hours and 36 operators. As simple as that. That's about it, guys. Very, very simple. And this is about question number 10. Now let's move on to case scenario number 2. This came from this chapter, marginal costing, and they have dedicated one exclusive question on sales mix. Right? This was actually very similar to a detailed descriptive sum which we did in the classroom itself. Kind of similar, not exact sum, but very similar. Each and every concept you have covered in the class. Nothing new at all. Now, what have they given? Many students could have gotten confused in one aspect. What is it? I will tell you. Z company or Z Manufacturing Limited produces different types of specialized products, namely X, Y, and Z. The following information has been collected from their books of accounts for the year ended March 2025. What have they given? So the three products are there. The sales is given in value. Per unit selling price, variable cost are given. Now guys, you should not convert, divide the sales with the selling price and arrive at the number of units. Please don't do that. Right? You should not convert anything into units. Don't convert anything into units. Keep it in value itself and solve. Right? Now, why have they given this data? Simple. Now, selling price is there, variable cost is there. If you subtract the two, you arrive at product wise contribution per unit. Now, with this, you can arrive at so contribution by sales into 100 gives you product wise PV ratio. So, you need to arrive product wise PV ratio. Now, what have they given? The total fixed cost is 18 lakhs. This company is currently discussing proposals to maintain a sales mix ratio, to discontinue the manufacturing of product Z and replace it with a new product W. In anticipation of the following results, they want to close Z, instead introduce a new product called W. Here it is Z, here it is W. What is the sales mix ratio? 55%, 30%, 15%. Selling price and variable cost per unit are given. Now the total fixed cost is given, the total sales is given. Now guys, this sales mix is a mix on the value, not on units. Clear with this? How do you know? Because currently, I mean, the proposed scenario, they have given the total sales value, right? And on the value, they have given the mix, guys, correct? Which means in this case, you need to compute the weighted PV ratio. You need to compute the weighted PV ratio. Now, currently, this is the sales mix. Now, guys, what do you need to do? What have they asked? Calculate the break-even sales at the level of proposed sales mix. What is the total profit in the proposed sales mix? What is the combined contribution to sales? Nothing but weighted PV ratio at the existing level. What is the total profit at the existing level? What is the new PV ratio in this scenario? Now, this is what they had asked. Very direct question. Very, very, very direct question. Now, simple. So, first they had asked for break-even sales. In case of sales mix, what do you do? The formula is fixed cost divided by weighted PV ratio. Guys, so now what you need to do, they had asked for the new one. So what you need to do, product wise, you need to arrive at the PV ratio, right? How do you arrive at the PV ratio? Selling price variable cost is given, subtracted, you get contribution per unit. Now, contribution divided by selling price into 100, you arrive at the PV ratio. The respective PV ratio into the sales mix will give you the weighted PV ratio. Now, guys, I will tell you all the calculations here in this sum. Now, at the existing sales level, this is before product W, the weighted PV ratio was 45%. Yes, I checked the calculation, it is 45%. And under the proposed scenario, the weighted PV ratio comes to 47%, right? So, at the current sales level, now what have they asked? Calculate the break-even sales of the proposed sales mix. Under the proposed sales mix, what is the total fixed cost? 18 lakhs, so 80,000. So 18.8 lakhs divided by 47%. So 18 lakh 80,000 divided by 0.47 comes out to 40 lakh rupees. So answer for the first part of the question, 40 lakhs. That's about it. Next one, the total profit at the proposed sales mix. So total profit at the proposed sales mix, simple. So 85 lakhs into weighted PV ratio gives you the total contribution. From that, subtract fixed cost. So 85 lakhs into 0.47 gives you 39 lakh 35,000. From that, subtract 18 lakh 80,000. You get 21 lakh 15,000. Answer is option A. That's about it, guys. Very simple. Next one. What is the combined contribution to sales ratio? That is weighted PV ratio at the existing sales level. I told you at the existing sales level, it was 45%. How did you get this? Product wise arrive at the PV ratio, multiply it with the sales mix. Sir, existing sales mix is not available, sir. No, this is the ratio. So 40 is to 40 lakhs is to 23 lakh 80,000 is to 16 lakh 20,000. So with this, you can arrive at the mix, which is 50 is to 29.75 is to 20.25. That's how you get it. Or another way of doing it is product wise, you arrive at the PV ratio. So product wise PV ratio at present was 50% for X, 40% for Y, and once again 40% for Z. What you can do is multiply this, arrive at product wise contribution, add it up, you get the total contribution. So product wise sales you have, add the total sales, total contribution divided by total sales into 100. This way also you can calculate weighted PV ratio. It comes out to 45%. The answer is 45%. What is the total profit under the existing sales level? Simple. So if you do this, the existing profit comes out to, so add all these three sales figures, 40 lakhs plus 23 lakh 80,000 plus 16 lakh 20,000, you get 80 lakhs into 0.45, that is the existing PV ratio. So gives you 36 lakhs. From this, subtract existing fixed cost of 18 lakhs, you will arrive at 18 lakh rupees of profit. So current profit is 18 lakh rupees. What is the new contribution to sales ratio in the proposed situation with product W? I already told you it came to 47%. The answer is 47%. A very direct question, guys. A very, very direct question. This question was not even tricky. This was straightforward question, and I don't think this would have even taken a lot of time. Reasonable time. It's neither, I wouldn't say it is, it can be solved quickly. Nor will I say it will take time. It's a normal sum. It's a normal sum, and definitely a direct question. This time, if you notice, in the case scenarios, it didn't run into pages. It was pretty much direct, but in the first case scenario which we did, that is material cost, there they had kept some test on the observations per month, per quarter, per annum and all. You had to be careful there. right? So that's about this, guys. Now that's about the MCQ discussion. I hope all the answers. I hope you guys have noted it down. So yes, that's about the MCQ discussion. So you can maybe comment on what's your score as per this discussion. Maybe you can comment on what's your score in this, guys. Every single thing whatever we have done is, whatever has been tested in the exam is more or less coming from our classroom discussion itself. It was not that complicated in my opinion, right? So now let's move on to the descriptive part quickly. I'm not going to give you guys the answer because it requires some computation, but I will just give you my perspective. The first question was a general question, and it just came in from this it had some concept to do with equivalent units and all they had asked. So I would put it as a very general question. Next, 1B, 5 marks. This came from joint and byproducts, right? They had asked you to show the apportionment of joint cost using the sales value at spread of point. I think there was even a byproduct, if I'm not wrong. Yes, there was byproduct. So the treatment of byproduct with apportionment of joint cost they had asked. Kind of similar question which we have done in the classroom. Then determine the total profit or loss, and what is going to be which of the joint products can be further processed for maximizing the profits under using incremental analysis of profits. Now in my opinion, guys, for 5 marks they tested 3 different parts of this particular question. Now that I feel maybe this question would have been worthy of a 7 mark, because they had also asked for further process or not decision, right? Had they stopped here, maybe this could have been a 5 mark question, but they also tested this. I felt this question for 5 mark, I think this is worth more than 5 mark is what I personally feel. Next one, this question came from employee cost, where they had just asked us to calculate the remuneration of worker X on the basis of Halsey and Rowan plant. So this is what they had asked. So a direct question again. Next, question number 2A, cost sheet for a total of 9 marks. Now in this question, if you notice, every single adjustment we have actually covered in the classroom. Nothing new at all here. And yes, specific equipment hired for the number of labor hours worked, specific equipment will come under your direct expenses and all. And they also asked for stock valuation using FIFO method. I think a similar sum we've covered in the classroom. They have mixed 2-3 sums, one adjustment they have picked from multiple sums, and they have created coined a new question. That's about it. But for that, it doesn't make much difference at all. It's pretty much simple. Now, expenses paid for pollution control and maintenance, this should be treated as a part of production overheads. Quality control comes under QZ. Lease rent for production asset comes under production overheads. Higher charges paid for hiring specific equipments comes under direct expenses. Primary parking cost, separate line item. Direct labor, it comes under direct wages. Fee paid for technical assistance, this comes under direct expense. Certain specific line item, I kept on repeating it again and again. That's what it is. Opening stock, closing stock is given. The cost of production figure is also given. So I think this might be, yes, stock valuation is required, and all other things have been given, guys. It's pretty much easy and straightforward. And remember one thing, selling expenses is 25 rupees per dolak. Dolak is a product. Now remember, it's 25 rupees per unit sold, not units produced, right? This I also asked you in the classroom to prepare a 2-statement format, and I told you guys that, look, if you learn it this way, you will not make a mistake in the exam hall. In exam, you prepare a single statement format, but the 2-statement cost sheet, that is cost sheet and income statement, I told you, income statement items are tied to your sales units, whereas your cost sheet items are tied to your production units. I've told this. So this is an income statement item. Ideally, this should be per unit sold. You just need to watch out on that, but for that, it's pretty much simple. They've asked you to compute the raw material consumed, prime cost, factory cost, COGS, cost of sales, and net profit. It's pretty much simple. Next one, question number 2B, it came from process costing chapter. You just need to prepare a process account and income statement. That's about it. So the normal loss, some abnormal loss also is given. I think it's pretty much a direct question. So not a great deal of difficulty is what I personally felt. Now, question number 3 fully was tested from the service costing. 3A, if you notice, this came from this banking industry. In our class, we did, in our classroom discussion, we did a question on home loan processing, housing loan processing. Here they had asked, look at this, this company, this bank is having a branch which is engaged in processing of gold loan and car loan. In addition to other services, the bank had hired 3 direct professional workers for processing of gold loan applications and 4 direct professional workers for car loans. All these things they have given. You need to calculate what? Total salary for the direct professionals to processing of gold loan and car loan and all these things they have given, and total cost of processing car loan application. Basically, this is about banking sector. We did one question. They have tweaked this question a bit, not a direct question as what we did. They have tweaked this question a bit and they have asked. That's about it. 9 marks, guys. Sorry, not 9 marks. It was 8 marks. Yes, 8 marks. Then B, this once again is from service costing only. Air hostess training services, and they have hired some hall and all these things, training costs, and so number of lectures and all are given. What have they asked? The total cost per training batch. For one training batch, what is the total cost? Then minimum training fee per trainee in a batch to cover the cost if it is fully occupied, and if they want a 20% margin, right, how much should they, and if they decide to charge 14,800, then they are asking how much should be the minimum percentage of batch size to be filled and all these things. Guys, once again, this also comes from service costing. Now all you need to do is, we have done multiple sums where reverse working and all we had to do. This is one such question where we had to do a reverse work, and we had to do it. This is not a direct question from our question bank, but based on the multiple sums which we have done, right, the calculation methodology is very similar. That's what I mean here. Fine. Next, question number 4a, guys. This is from I think, yes, standard costing chapter. Once again, a reasonable, a direct sum here. So material and labor related variances they had asked for. Then question number, this is 4b. This was from, okay, so this is, I think, this page is somehow, I think it is blacked out. No problem. This is actually from your cost accounting standards. Sorry, cost accounting systems. They had asked us to prepare a reconciliation statement, and that's about this particular question. Once again, very similar to what we have covered in the classroom. And guys, this page is not visible for some reason. 9th page alone didn't come. This there was another question, 5a. This came from overheads. That is 6 operators worked on 8 drilling machines. Comprehensive machine hour rate. Exactly the same question which we did in the classroom came for a whopping 6 mark here. So you are required to calculate, I'm sorry, they've asked, find out the total amount of annual insurance premium. This is more or less, I think, a reverse working methodology they had asked, very similar to what we actually did in our classroom. That's about it. Then question number 5b. So this comes from your budgeting chapter. Exact sum we have done. Budget ratios. Figures are different, but budget ratios, direct ratio calculation, they had asked us. Right? Actual hours worked, standard hours for actual output, standard capacity usage ratio, and actual usage of budget capacity ratio. Exactly, we have done all these things. If you remember, last sum of this chapter, we did this. Right? And then 5c, I think this is from marginal costing. They are asking us to compute opportunity cost, direct lift from our solved question bank. Exact sum we have done. Exact sum. Figures change, but exact sum opportunity cost calculation. If you see in our library of adjustment, if I am not wrong, this will be question number 24 or 25, somewhere around that in this chapter. Exactly this sum got actually tested. 1 second, I can also open the solved question bank. Yes, so today I was taking a session for them. 1 second, 20. Okay, it is 23. Yes, similar to this, right? Calculate the opportunity cost exactly in our page number 438, volume number 2 of our solved question bank. This was exactly tested, guys. So this came in here. This is our solved question bank only. 1 second, I will just give you guys, this is our solved question bank, volume number 2. This is our solved question bank only. So from there directly this question came in, the computation of opportunity cost area, right? Then moving on, then question number 6. Now guys, this time those who attempted theory, I told you yesterday itself, the last minute guidance I gave you, never omit theory and go. Who knows, in exam theory could be easy. This time it was fully practical. Right? Practical theory, have you just if you had attended the lectures, you will be able to conceptually write it. That's about it, guys. What have they asked? Classify the following items of expenses by functionality and variability. Where will this come? Under which function it will come? Right? And what is the variability? Variable cost or fixed cost? All these things they had asked. Guys, that's about it. Very simple. Consumable stores comes under production overheads. Right? And variability, variable or fixed. General manager salary, right? It comes under administration overheads, variable or fixed. All these things you just need to write. That's about it. 5 marks, guys. You just need to fill this 10 boxes, 5 marks. It will not even take you 2 to 3 minutes in exam. Savior, time savior. Next one, suggest a suitable incentive scheme to factory for its workers, keeping in view the following: the entire gains of the improved production should not go to the workers. In the name of speed, quality should not suffer. The rate setting department being newly established are liable to commit mistakes. Exact sum we did in employee cost. Now, in volume number 1 of our solved question bank, literally, guys, we did this exact question. 1 second, I will show it to you. We did this exact question in our classroom. If you guys remember, the answer to this is row 1 scheme, where under row 1, all these issues get resolved ideally. So we have done this exact sum in our classroom. I'll just show it to you. 1 second. So here we go. Okay. One second, guys. Yes, look at this. Question number 10. Exact sum they had asked in the classroom. In fact, I also asked you to write it in points in exam, right? Exact sum. We discussed this. Even though it is theory, I said since it is a practical theory, I discussed it in detail. The entire gain should not go to the workers. In the name of speed, quality should not suffer. The rate setting department being newly established are liable to commit a mistake. Prepare a suitable incentive scheme. So row 1 is the best plan here. Reasoning and all we have seen here with an example. Also, I told you how it works. This much explanation is not required. Summarized version. I gave a practical example and also I showed it to you. That's all, guys. That's all. Literally, it has all come from our discussion only, classroom discussion. Then discuss the usefulness of ABC. We know how ABC is useful. Whatever you know, some 4 points you need to write. Or discuss the 4 components of budgetary control system. They have just asked it some practical theory. It is an option. Now, guys, and remember, I told you yesterday, I told you once again that from employee cost and your budgeting, they test a lot of theory, employee cost and budget. Just see, 9 marks theory exactly came from where I told you, that is employee cost and theory. This is based on the past analysis I told you, and that's about it, guys. Fine. So that's about this entire question paper discussion of Jan 2026 attempt of your costing paper. So now this is about the entire discussion, and I'm really happy that about 99 marks came from our the top priority chapters, and almost the entire paper came from our classroom discussion. Beyond that, there was nothing at all. And this is the the question wise breakup from which chapter it has come from. Question 1 alone, it was generic. I couldn't plug it under a separate chapter. Maybe some people might put it under unit and batch, but I don't think it comes under any specific chapter as such. It's just a conceptual area that we had to do. That's why I keep insisting on conceptual learning, guys. That's all is required. Beyond that, nothing else at all. So that's about the discussion here, guys. So you can just you can just let me know about your thoughts on the comment section. You can let me know how you felt the paper was. So that's it from my side, guys. So now go on and prepare for your next paper. So you have about 4 days for your last paper, that is FMSM. So in between, audit got postponed. So now spend this time properly. I'm also planning to upload the revision videos for a few chapters. I will definitely do that as well. Start your preparation. Once again, I will come up with a separate strategy video on how you can spend the next few days for your next paper, financial management. So that's it from my side, guys. I will see you all in the next one. Thank you all so much. Bye bye.